I've often said that Americans can do anything we want to do. We're adaptable. We can make lemonade out of lemons, but we have to have a plan on how we're going to get there.
Helping keep us financially focused, we join John Kuykendall, founder, CEO of GulfCoast Financial Services. Of course, GulfCoast Financial has been named Best of the Best in Financial Services 10 straight years and running by the readers of the Lake City Reporter. So we always appreciate John Kuykendall's perspective and guidance on our money, our investments, and what to do with those to help us achieve our goals into our financial future. John, I know that there is a lot of concern and doubt and uncertainty with everything that is going on in the market right now. And this is right in the midst of as we are trying to figure out where we're going to take those trips this summer.
Well, it's really a heck of a time to be trying to spend money, Peter,
Yeah.
because nobody feels good. I mean, we have lost some money in the market. The market is down. But, the truth of it is that the market goes up and down. That's normal. We normally have ups and downs. So this one's a little deeper because we have some political problems that are with us with the tariffs, and the way that President Trump's handling that has created a lot of speculation, and also his call for the chairman of the Fed to step down. So I mean, there are some things going on beside that, but ups and downs are normal. It's part of it. And that's why I've always said, Peter, that if I had that income plan, that financially focused income plan, I could plan for things like this because I've got three buckets. I've got my immediate bucket that I'm spending my monthly stuff on. I've got checks coming in that are predictably sustainable over a long period of time. So I have my own pensions. And then I've got my growth bucket. So in times like this, I don't have to hit my growth bucket as hard because everything else is taken. Can you imagine going into this market with the downturn we had if all you were relying on was your growth bucket?
Yeah. John, does having that financially focused income plan allow us to have a little bit more stability and confidence throughout a market downturn or turmoil or volatility in the market?
Yeah, Peter, the clients that I've talked to and the prospects that we deal with, they have felt like that financially focused income plan gave them a roadmap. And so they could use that roadmap, and they know that we're going to go up hills and we're going to come down them, but that over the long haul, the road's going to be fairly straight and fairly level because we're going to take care of those dips and valleys with that income plan. If you've got a monthly check coming in every month that you know is going to be there, then you don't have to rely on the market.
John, when we look at our money, a lot of it does tie into our mental, emotional, psychological state. So during times of high market volatility and uncertainty, we can also have emotional volatility and uncertainty. Our mood for the day or the week dictated by the color of the stock chart on the screen on TV in many cases. And I don't think that is a recipe for a confident retirement. And I know that having that financially focused income plan is about segmenting your assets and diversifying into different types of asset classes that are purposed for different timelines.
Yeah, that's right, Peter. What we're doing is we're looking at different assets. We're looking at different classifications. And so we're not relying just on growth stocks or growth, in internet stocks. We're looking at different kinds of sectors, different kinds of stocks, and also different instruments, fixed annuities, indexed annuities, life insurance. We're looking at the whole gamut so that we can put together a plan that's going to give us a good income. You remember that old map that we used to talk about, the bell chart, where it started out with, you started out and as you going up the curve, the market went up. You got a euphoria, and at the top you were at your highest, and then all of a sudden you started down, you got a little paranoid, and then down at the bottom you got panic. And so you've got to get through all that because emotionally you can't let the market take away from your happiness. You've got to be able to have a plan that kind of levels that out for you, Peter.
I like you just coined a new term. I'm going to use it. I think it is the fear of missing out, the FOMO, but I like your term, the euphoria, better. That is the fear of missing out on everybody else's euphoria. And what everybody is, always excited about is when the market goes up and we feel like we are going to miss out. And so
Right.
we get in when everybody else has already made money. And then that chart, that roller coaster that you're talking about, the market ends up going down. So we do the wrong thing at the wrong time. And I think that's, John, why we need that financially focused written retirement income plan. Now, that being said, it is during the midst of market volatility necessarily a bad time to put that plan together? And I ask that because as part of my show prep, I'm part of different financial chat rooms and advisor groups. And I saw a post from an advisor recently, and I really felt the sentiment of the post. He had screenshotted a note from an upcoming meeting saying we're holding off on planning due to the market volatility. And then his caption, he had not posted names or anything, but his caption was, make this make sense. And I really felt that because during a time like this, isn't that exactly what we need to be doing is making sure we have a plan in place and solidifying that plan?
Well, Peter, if you're retired, you have a limited amount of resources. I mean, that you're not gaining any more resources. And if you're spending your resources and not knowing how you're spending them or where they're going or how long is my money going to last me? How can you do that? So, yeah, it's a great time to plan. It's a great time to actually do some things in the market, you know? So, you've got to have a plan, your own limited resources. Peter, inflation is killing us as seniors. I mean, everything is costing more. Do you realize that in 2005, Medicare Part B was $78.20? In 2025, it's $185.
Hmm.
It's doubled in 20 years. So, can you imagine as things continue to get more, eggs, everything, bacon, everything, they're saying meat now is going to cost a lot more because of the tariffs. All the stuff that we have that we import is going to cost more. How are you going to be able to have the kind of retirement that you want, the kind of retirement that you need without planning?
And we need to identify when we have the opportunities to plan more efficiently and effectively. John, I know that there are certain times, certain milestones, and a big one is a lot of people are not masters of their own destiny to the fullest extent that they could be. In other words, they are a participant in someone else's plan. If we've got those employer sponsored plans, your 401k at your job, that is not your plan. That is your company's plan. They're allowing you to participate in it. And a lot of people have older 401ks that have been left behind or have reached this age of 59 and a half and might have some doors open to opportunities to take control and to formulate or solidify their own plan. Is this a beneficial opportunity? Should we be paying attention to it?
Sure, Peter, because one thing is that we're not looking at the cost of that plan. We're not looking to see how much it cost us. The administrators and the companies passing on the cost for the 401. So how much is that? The administrator or the company is telling you what you can and cannot invest in. So is it what you want to invest in, what you need to invest in, or are they really maintaining that plan because maybe they're not using that plan anymore. It's still there, but they've come out with another one, or they've got a different kind. There are all kinds of reasons why you need to move it, consolidate it, take control over it, and use it in your overall planning.
Well, again, we are talking with John Kuykendall, founder at GulfCoast Financial Services. If you would like to get your own financially focused written plan for retirement, pick up the phone, give them a call, 386 755 9018, 386 755 9018. John, additionally, if our time horizon has changed, if we are uncertain about the prospects for our continued job security, that they are going to continue to invite us back, or by our own wishes, like during COVID, I know that a lot of people sort of backed up and said, hey, I just don't want to deal with this anymore. And it was called the Great Resignation. A lot of people during that period changed their timelines. And I think some of that is also going on now where people are backing up and assessing the need. If our timeline changes, is that not a cue and a pretty strong indicator that we need to back up and assess the plan as well, or at least review and revise that plan to reflect our now changed status and timeline?
Oh yeah, Peter. I mean, even the market conditions. I mean, your portfolios have changed. Either, they stayed the same, they've gone down, or they're up a little bit. And so anything that affects the plan needs to be taken into consideration. Now's a great time to do the planning so that you know what your risk levels are, what your taxes are going to be, and also how you're going to handle this market and how you're going to come out of it. The other thing, Peter, is don't forget that Medicare, Social Security are all planning to have big changes. I mean, they're going to have big changes. I read this morning that some of the proposals for Social Security is indexing for income. So the more the income that I have, the less Social Security I'm going to be able to rely on. Giving a haircut across the board to everybody, changing the payroll taxes. All these things are what politicians are looking at because we have to do something to keep Social Security alive. And it's not that much longer. Medicare is in the same problem. So Medicare costs are going to have to go up. Maybe they're not going to cover as much of our Part B as they normally do. We're going to have to take more of that medical cost on ourselves. How are you going to plan for that? How are you going to plan for the new taxes that come out this year? Peter, there's so much that's facing seniors. There's so much that's in front of us that without a plan now that we can adapt as we go forward, I don't know how you're going to get through it.
And having accounts, having an IRA, having a Roth, having a 401k or a brokerage account, John, that does not constitute a plan. Like those are important tools that will be utilized within the plan, but those don't address many or any of the aspects that you just mentioned, don't bring the pieces together to formulate the picture of what we want to achieve and accomplish into the future.
No, I mean all that's our asset. That's our assets that we're building. It's our accumulation. How are we going to distribute that during retirement? How long is it going to last? What's the best tax way for me to take my distributions? You know that I've got RMDs coming out at 73 if you haven't already owned one, and then it's going to, keep going till 75. So I'm going to have to start taking this money out. How do I take it out most tax wise? The charitable contributions that we can do after age 70. All those things help our taxes. How can you manage inflation, all the changes that we're going to have without some kind of plan, Peter? It just doesn't make sense. Me putting my money in a 401 or an IRA, Roth IRA, it's going to grow or decrease with the market, but it's not going to give me a plan that tells me this money is going to last me until I'm 90 or I'm 100. I mean, how are we going to live? What are we going to do about long-term care? How am I going to pay for long-term care? I'm going to need someone to come in and take care of me Am I going to have to go to a home and go to government assistance, or am I going to be able to stay home and have somebody take care of me there?
So much to be concerned about, and in the
Yeah.
midst of market volatility, kind of throws gasoline on the fire of all of those other things that we know are looming out there. But I think the market volatility and the losses make it real right now, John. And so a lot of people sort of bury their heads in the sand on all of those other things. But the reality is that we are still exposed to those risks regardless of whether we address them or not. And that's why it is so important to have that plan put together so you can face them head on, understand that they are coming at you, and tactically address them with confidence. And that's what the financially focused written retirement plan is all about, ladies and gentlemen. If you'd like to get that put together, again, give John Kuykendall and the team from Gulf Coast Financial Services a call, 386-755-9018, 386-755-9018. They have been named best of the best in financial services by readers of the Lake City Reporter for financial service for 10 straight years and running. Give them a call and find out why. 386-755-9018, 386-755-9018. John, we recently did an episode on some of the defensive strategies, defensive investment options, and defensive tactics. And just to reiterate, moving to a defensive stance does not preclude, eliminate the ability to continue to make forward progress. Defensive does not mean you're giving up on gains.
No, it doesn't mean we're parking our money in a checking account with no interest. What it means is that we are taking steps to get into bond funds, to get into fixed annuities, whatever has a yield, but isn't subject as much to the market, so that we can wait till this thing changes. And Peter, we're really as seniors, we're facing the perfect storm. We've got all these things: Social Security, Medicare, inflation. We've got now the market, killing us. All these things are against us, and the only way that we're going to be able to get over that big wave is if we have a plan on how we're going to jump it. Because if we don't, we're just going to sink to the bottom like the last boat did.
Well, market volatility can be unnerving, especially, John, compounded with all of those additional issues, the risks that we face in retirement. I know that is why you wrote your book. Quitting is for winners, but retirement is not for wimps. It addresses many of these. In fact, John, now that book, I mean, a little bit more than a year old, it seems like you were pretty prophetic in talking about how these things can and will happen. And now we are in the midst of them. And your book not only addresses them and talked about the reality that we will face these risks, but talked about a lot of solutions as well. And I think that's why it's such a valuable read for proactive savers and investors.
Well, Peter, I've been concerned for several years now about where we're headed, the things that are going to be in place for us, over the next 3 or 4 years. Not a long time. I mean, we are faced with some major changes right away. And how are we going to adapt to those? I've often said that Americans can do anything we want to do. We're adaptable. We can make lemonade out of lemons, but we have to have a plan on how we're going to get there. And that's why I'm so passionate. And I wrote the book trying to get people to understand why we need to plan and why we need to have a budget.
Well, if you would like a copy of that book, or more importantly, put those strategies into application and personalize them for your situation, give a call to Gulf Coast Financial Services. You can get the Quitting is for Winners, but Retirement is Not for Wimps book. You can also get your personalized, financially focused written retirement plan, diversified strategies with long-term goals that are personalized for your situation. Give a call, 386-755-9018, 386-755-9018, or you can visit online, gulfcoastfinancial.net. gulfcoastfinancial.net. John, always a pleasure having the opportunity to speak with you. We do appreciate the guidance and the insight that you provide.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting gulfcoastfinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.